The Jackson Hole Virtual Economic Symposium kicks off tomorrow, but we're going to start our coverage today. Steve Liesman interviewed the host of the summit, which is always interesting. It's the Kansas City summit that's based in Jackson Hole, because they're not stupid. Kansas City Fed President Esther George, and right? That makes me think they may be the smartest of all the regional banks, Steve.
Yeah, I wonder in the negotiations when they made the districts, did they kind of say, oh, no, we need that piece right there as part of our district because it is kind of far away. But we can talk about that in just a second, Joe. But I do want to get to this very newsy interview with Esther George. She made the tough choice last week to take the Jackson Hole Conference virtual amid the rising concern about the Delta variant. And she was pretty clear in our interview when it comes to the tough choices on monetary policy. She does not think the new outbreak should deter the Fed from starting to taper.
I think keeping the Delta variant as one of those risk factors to the outlook is important. But frankly, the guidance that the committee's offered has pointed to watching for progress in how the economy's unfolding, progress toward our objectives for employment and inflation. And I think my own view on that is that we have made substantial further progress, and that we can begin to talk about backing off of some of that accommodation. So that I think is appropriate given the progress we've seen. It doesn't mean that we will move all the way to neutral or tighter policy, but I think as a first step, signs in the economy right now are showing that we're reaching that point.
Are you ready to support an announcement of a taper as soon as September?
So we'll be meeting in a couple of weeks, and I think the progress I've seen so far is encouraging. And what month in particular we do that, I think is something the committee will certainly come to consensus on. But when you look at the job gains that we saw last month, the month before, you look at the level of inflation right now, I think it would suggest that the level of accommodation we're providing right now is probably not needed in this scenario. So I would be ready to talk about taper sooner rather than later.
Are you concerned that the inflation levels we have now will bleed over into next year?
So depending on how supply constraints unfold and how strong demand stays, I think what we're seeing is those are more persistent constraints and could keep upward pressure on inflation. I certainly think that it's a reasonable baseline to say that firms adjust, households adjust, and we could see some evening out in the pressure on inflation. But it's something you have to watch because, again, the more persistent that is, the more the process that people build into their thinking about inflation can be affected.
Vice Chair Clarida talked about the end of 2022, beginning of 2023 as the time for rate liftoff. Is that something that's in agreement with your outlook?
So I think that's in the window of a reasonable outlook. And again, completely dependent on how the economy unfolds. And so looking out to the end of 2022, 23 will mean judging a lot of job reports between now and then and looking at how growth in the economy unfolds. And again, looking at our mandate for inflation. So watching all of those carefully, obviously, will signal when it's time for a rate adjustment.
So speaking of growth in the economy, the title of the conference discusses the idea of an uneven recovery. And sort of inside of that is a presumption there has been unevenness. Can you talk about where you've seen this unevenness and where it matters most to the Federal Reserve and what it can do about it?
So the theme of the conference is looking at an uneven economy and in particular, starting with what this pandemic shock has meant. We've seen that unfold in job sectors. We've seen it unfold in geographies around the globe in different ways. And that unevenness, as it's come through in the recovery, we've seen, for example, between service sector, between the goods sector. Layering that on top of an economy, some might argue, already had features of unevenness. Whether you think about market concentration, you think about other aspects of inequality in the economy, really raised the prospect for this year's conference to say, what insights could we bring in terms of how macroeconomic policy interacts with that unevenness?
Shepard Smith here. Thanks for watching CNBC on YouTube.